The earnings coming in for Citigroup at $1.28 a share. Revenue coming in almost $18 billion. FICC was down year on year, but up versus estimates. Equities down year on year, but investment banking performance was the best in 7 years. Back with us, Charles Peabody of Compass Point. Your reaction to Citi?
Well, the numbers certainly are stronger than expected. The revenue number was in line, so I'm trying to figure out where the beat was. But certainly the investment banking, we were looking for about $1.2 billion, and then trading, we were looking for about $3.7 billion. So I haven't seen the numbers yet, so I'm not sure.
Right, we're going through the press release right now. What I also thought was interesting is that their global consumer banking revenue was up, as well as their loans, but their loan losses were down slightly year on year. That feels like a different story than the headlines we got out of JP Morgan. Is that a fair assessment to make?
Yeah, I mean, they've been talking about generating positive operating leverage out of both Mexico and Asia and the consumer bank. The North American bank, they've been looking for the second half to be where the story really starts to build because of the card business. And so what you want to look for is there something in the card business in this quarter that's showing a momentum into the second half?
Are we finding out from these earnings, though, that higher rates have helped bail out a really weak trading environment on the quarter?
Well, not in the case of JP Morgan. That was the big disappointment in this quarter. They had guided net interest income, or top-line revenue, to be up $400 million from the first quarter. It only came in up $100 million. For the full year, they had guided $4.5 billion increase, and now they're lowering that guidance to only a $4 billion increase. So NII was a disappointment at JP Morgan.
What's your base case through the rest of the year now?
Well, I think this gets back to the core businesses, and the core businesses, I don't think, are showing a lot of momentum. You know, whether you're talking about cards, mortgage banking, lending, although JP Morgan did have 8% loan growth, and even the capital markets, although Citi obviously was stronger than expected.